Welcome to the FNO InsureTech Podcast, a place where movers and shakers from all points within the insurance ecosystem gather and discuss all things InsureTech. We talk about how technology and innovation are affecting and driving change in the industry. Here are your hosts, Lee Boyd and Rob Beller.
Hey, podcast world. We are here today. Both Lee and I are in the office, but only for like a minute because we're deep into conference season, running back and forth across the country, attending this conference and that. And we're about to go to an exciting one this week, right, Lee?
We are. We're going to the Access Conference down in Orlando, Florida.
Right. The Access Conference is put on by our network division and will be held in Orlando, Florida. And so it's kind of an Alacrity conference put on for Alacrity customers.
Yeah, it's a big one. I've never been. This is my first year, but I've heard a lot of great positive things about it. And the attendee list, I'm told, is huge.
Right.
And customers from all across the country are going to be there.
Right. It's the opportunity for the network, the managed repair program for Alacrity, to meet with all of their contractors, many of their contractors from around the country who do the work on our behalf for carriers and others in all states of our union. And so Lee and I are fortunate enough that we get to be there. But because we're running around like crazy people, we don't have a brand new episode for you this week. But we do have a really cool one that we found in the vault. One of the benefits of doing a podcast like Lee and I have for the last 27 years is that you have a library of 230 episodes to choose from.
You have a great library, and we have today, we're going to bring one from the vault, and it's Jamie Trish, and she's the president of Fairmatic, and we're going to get to listen to her retell the story of Fairmatic and what's going on. They just made the news a couple months ago with some additional fundraising, and it's a company that is very interesting. And Rob had just come off of the CCC conference, and so he was thinking auto, so why not talk to a company who deals with commercial auto?
That's right. Last week I was at the CCC conference, which is the dominant estimating platform in the auto side of the insurance world. And what a phenomenal conference. I mean, we could go on and on talking about that, but like Lee said, it has me thinking about auto and thinking about the future of auto and the future of auto insurance. And so you take one of our favorite all-time guests, Jonathan Matus, and you give him an opportunity to be clever and creative. And what happens? He creates Send Drive and then quietly creates Fairmatic, and brought in a big insurance brain, Jamie Trish, to help run the insurance side of it. So let's listen to what she has to say. Her insights and her thinking are very refreshing.
Let's do it. Let's do it.
Without further ado, here is our One from the Vault episode with Jamie Trish, president at Fairmatic. Hey, everybody. We are here with our very special guest, who is actually a member of a team that includes another very special guest.
That's right.
One of our all-time favorite guests, Jonathan Matus.
He is.
Shout out to Jonathan.
Yeah.
But today, we're going to one-up that by bringing in the president of a stealth company, a company that's been in stealth mode. Right, Jamie?
That's right. I think we're officially de-stealthed, but we had been in stealth mode until very recently.
We have Jamie Trish with us, the president of...
I'm the president of insurance at Fairmatic.
President of insurance at Fairmatic.
Yes.
Wow. That sounds like a big title.
It does.
You're the insurance person in the organization.
I am one of many wonderful insurance people in the organization. We got a great team. One thing I'll say sort of upfront about Fairmatic, and I know we'll talk a lot about what we do, but sort of what drew me to the company is really, I think, we're the coming together of insurance and tech. And so I might be the president of insurance, but I feel very much in partner with the technology people to bring a different way of thinking about commercial auto.
How neat.
Cool.
Let's start by talking a little bit about the history, because not every company is in stealth mode. But I guess, first of all, why did you have to do that? And then tell us a little bit about Fairmatic.
Sure. So Fairmatic was really probably initially started, you could say, back in 2017. So a number of years ago. It was incubated or as a part of ZenDrive. And the idea there was Jonathan recognized that what he had with ZenDrive was an enormous amount of driving data that could really, really accurately predict the likelihood of insurance losses on the road. And so he said, hey, there's a huge opportunity here. Let me take some time and see if this is something we can make work. And so slowly but surely, with no pressure of growing, selling, or doing anything grand, he and a small team within ZenDrive took the time to build predictive model and test it in the real world over a 5-year period or 4-year period while we were in stealth mode, and really be able to prove out that the model worked in the real world. So that's we really here at Fairmatic, I think Jonathan's vision always was that we want to do something new and different, but we want to do something new and different that can sort of last. And so really wanted to take the time to watch the results come in, let them play out, and ensure that we had something that was really different.
Before we ask you what's new and different, which is a very intriguing proposition, tell us a little bit about ZenDrive and what ZenDrive does for you guys, or how it ties together.
So ZenDrive is, I think your guests would be best served by going and digging up your podcast with Jonathan to hear all of the wonderful stories of ZenDrive and how it was founded. It's really an inspirational story about Jonathan's career, in the building mobile tech and really recognizing the unintended consequences of mobile technology on road safety, and then building a company in ZenDrive with a mission to make roads safer. And so that's I think a truly inspirational story worth exploring on its own. But if you think about our strategic partnership with ZenDrive, we have been spun out of ZenDrive, so we're totally an independent company. But we partner with them with respect to their driving data and their technology, sort of as a service provider.
So what's new and different?
Yeah.
So what's new and different about Fairmatic? If you were to say, okay, what's Fairmatic? You could call us a commercial auto MGA, and that would be sort of accurate, but I think we're really much more than that. So if you think about our product, we're an unconventional, I think more impact-driven alternative to traditional commercial auto insurance. So we have proprietary pricing models that were built on a couple 100 billion miles of driving data. And what that means is with our technology, we are able to reward our safest driving customers with lower insurance premiums. So our Fairmatic's commercial auto customers sort of get fairness, hence the name Fairmatic, along with control over their costs that they can't get from any other commercial auto provider.
And so whenever you're writing these policies, I assume you're selling them a policy, but if they drive good, that's when the discounts come, or do you discount it up front based on some other knowledge?
Yeah, no, the first way you spoke about that is right, but there's a couple mechanisms that work. So every commercial auto insurance company is trying to assess risk and sort of price fleets as much as they can to the risk. So people are doing the best they can to guess what the risk is going to be. But our technology is different because it captures driving data that gives us more accurate and real-time insights into the actual risk as our customers are driving. But there's really two mechanisms that it works. First, we can immediately reward our safest driving fleets with lower premiums. So you don't have to wait a year at renewal to get a new discount.
Wow.
So we quickly, at very quick feedback you see in your premiums, safer driving means lower premiums. But second, we also, because we give feedback to fleet managers about how their drivers are performing on the road, even those customers that aren't don't join us as the best drivers, get the information and insights that they need to coach their drivers to improve on the road. So the customers win because they either are already driving really well and get immediate discounts, or they get the information they need to improve their driving and then in turn lower their insurance premium. So it's a real, I think, win-win here for the customers who, get more accurate, lower premiums. And then Fairmatic, where, we're able to profitably grow by incentivizing safe driving. I think if you look at those two combined and go back to the ZenDrive mission, we at Fairmatic also have the shared mission with ZenDrive, which is to make roads safer. And so I think what I especially connected to at Fairmatic is it's not just better for fleets or customers and better for the insurance company, it's also better for society, because sort of when you're driving on the Fairmatic product, we are, 1 mile at a time making roads safer for everybody.
Is that something that's talked about at the company? Is that mission statement discussed, and everybody who worked there, are they aware of that is what you're trying to do?
So I think one of the reasons that I made the switch from sort of big company to startup was because of how connected I personally felt to the mission and how connected the folks I met with at Fairmatic feel, in terms of the mission. So yeah, it definitely is something that we think and talk about. One of my favorite things I've done at Fairmatic is to work with Jonathan and the leadership team to establish our company values. And we take those very seriously, and they're tied to our mission and how we want to approach our business. And it's something I think you see and feel around the company every day.
That is really good to hear. I like hearing that. So tell us about the actual is there a product in the vehicle, or does it use mobile phones? How do you get this information once a policy is sold?
So once a policy is sold, we onboard our customers to our technology, which does utilize, we're pretty flexible actually. So we can do mobile technology, which is obviously ubiquitous here. We can do a device in the car. And I think one of the powers of our approach is that we don't have just one way of getting at the data, but through those various versions of our technology, we're able to capture the driving data that we need to run our pricing models and provide those driving insights back to the fleet manager.
Since you're riding a particular fleet, are they anonymized? I know that in the big picture of, like you said, a couple 100 billion miles, that's anonymized data. What about this? I would think is not, correct?
So it depends on, I'm not sure, like when you think about anonymized, when we think about sort of an individual customer. So let's say we have, a customer, Jamie's delivery company that we insure. In order for us to allow that customer to provide the coaching and insights that they need for their drivers, we do need to give that customer information about what opportunities each driver has for improvement. So does this driver need to, speed less or, undertake some different change? But that being said, we take privacy extremely seriously. So while we give feedback about driving behavior so that it can be managed outside of giving that directly back to the customer, we don't, it's anonymized beyond that.
Okay. But they have to be able to, that's part of the point here, is by being able to communicate behavior to somebody that can influence it to change.
Absolutely. It's part of the value proposition that you have to know what you have to improve in order to be able to improve it. And we have customers that want to buy from us are the ones that want to get the benefit of being able to control their insurance costs. And like I said, we take privacy very seriously, and we're able to partner with them to get them the information that they need, but to protect the privacy of their staff.
Are you insuring small fleets like mom and pop type places, or are you doing national? And if so, what states are you in?
So we can write in every state. We, are new and small and growing. Right. I think one of the sort of best things about our product is that because it's based on actual driving behavior, it really could fit anywhere.
Yeah.
So it could fit, it's not really good for one type of fleet or one industry or one state. It really sort of gets rid of all of the noise and gets down to brass tacks about this is how you drive, and how you drive is going to sort of influence significantly your claim experience. So the beauty of the product is that it really can apply in any situation. We have sort of as a company started out more in the middle market type space, but have been moving down market and continue to expand the industries that we write with.
Why start with commercial versus personal lines? Why did y'all decide to start on the commercial side?
Back when Fairmatic started, and, if you look at sort of my most recent experience before joining Fairmatic, I knew from that, and Jonathan recognized that the commercial auto industry has been facing some significant challenges. So if you look over, the past decade or so, there's been $20 billion in underwriting losses. And so there's high limits in commercial auto that are very sensitive to inflationary pressures. There's long development tails so that it can take time for, insurance companies to get their arms wrapped around exposures. And, the biggest carriers in the industry know this, but they've been unable to fix it. So there's, regulatory constraints, cultural constraints. There's, a fear of disruption of a book. And so there's a huge problem to be solved in the commercial auto industry. And I think Fairmatic is well positioned to work on that problem.
So what you're looking for your customers, for the insureds, are commercial fleets or companies that have commercial vehicles that are willing to get involved. They want to play a part in what happens here. Because if they don't get involved, then they're losing the benefit.
I think that's exactly right. So I think a customer will come to Fairmatic. So if you sort of think about how the industry is working today, there's been, because of the challenges I outlined, sort of substantial rate increases across the board. So any one fleet, sort of both the good and the bad, is likely to have seen multiple rate increases over the last several years. And so if you're a business owner, I don't think you sort of necessarily wake up one day and say, I want to think about my commercial auto premium. But what you do, when you experience ongoing sort of rate increases like that, you start to think, hey, why is this happening? What can I do about it? And so I think what our product, customers that are attracted to our product are ones that, are driving better than their insurance company that thinks they are, or ones that are willing to engage and really manage the driving behavior to take that control over their insurance costs, and really enable their businesses by reducing their insurance premiums.
So how does the feedback loop work? Because I assume there's a feedback loop, right? So your system is sending information to the insured and saying,
like
these vehicles, a report card on, here's your 37 vehicles, here's your 37 report cards, or 37 drivers, here's your 37 report cards. And that data is probably going out however they customize for it to come to them, however they want it.
Yeah, you got it. So we, once our technology is installed, we're able to provide real-time feedback to our customers, our fleet managers. Most of them interact with our dashboard, which is a system that they can log into and get sort of insights served up about their individual drivers. And it is a report card. There's a score. The score is not just a number. So, Rob, I'm sure you'd get an A, but
I would not.
But if you didn't,
I would not.
If you didn't, then it's not just a number. It's guidance around what it is that is you have in terms of opportunities for improvement, so that it's really easily actionable, so that you can go say, hey, Rob, when you're driving to that customer every day, you tend to speed on this part of the trip, and you gotta improve your driving, and it's immediately actionable for the driver to then go and improve their driving behavior.
And the follow-up is really easy too, for the management to say, okay, let's see how you've done.
It absolutely, we provide the management sort of information about the drivers, and then they're able to see how their drivers are performing over time. So who's improving and who's not improving. And then I think, importantly, we haven't yet sort of made the point that not only is it that they're able to see how a driver performs over time, they're able to then tie that performance back to their insurance premiums. So they can see as Rob gets better driving, they're going to pay less in insurance premium.
Now, so I'm interested in when it's originally bound, when it's a new policy, how do you rate it? How do you underwrite it originally? Where does that data come from?
Yeah, so we, are competing against more traditional carriers. And so we have to package our product and offering in a way that an agent and broker and customer can understand. And so you can imagine we sort of take the information that we have that's about the customer, about their fleet, about where they're driving, about their exposure, and offer them sort of what we would call, here's what your estimated price is going to be based on average driving behavior. And then we're allowed, like what we enable them to see is if you drive better than that, then you could save money. And then if you drive worse than that, you'll wind up paying additional insurance premium above the estimate. So we're able to telegraph for them, here's what your experience with Fairmatic can look like.
And I'm wondering how the drivers are responding. I mean, are the drivers saying, wow, this is great that you're spying on me, so to speak, or that you know what I'm up to, or do they push back? Or, I mean, what's the feedback there?
So we've had tens of thousands of drivers come through the platform. And I think, with having gone through that many drivers, there's going to be, of course, like a range of feedback. There are, obviously drivers that would prefer not to get monitored. But I think what we've seen with our customers by and large is that this becomes a part of sort of how they manage their business, and it doesn't feel like necessarily something different. Mm-hmm. And that, the fleets are able to utilize the feedback that they get from our product to help drivers, like reward drivers that are, already driving well and saying, hey, good job, Rob. Mm-hmm. And that where there's opportunity for improvement, they're able to provide specific coaching. So there's going to be always an element of folks out there that feel like Big Brother, or I don't want to get tracked. But, by and large, we've had, enough of the market and enough customers come through that see the value in our product and technology and understand how we're using the data in a way that's specific to their commercial auto premium and nothing else, and are really on board with what the value is that we bring.
I would think that very few drivers out there are not used, or they're used to some technology tracking them, right? I don't know of very many fleet operators out there who don't have something in their car that reports back to home base to let them know where they are. Have they made their delivery? Have they not? So I bet they're used to it. And plus, it's up to the owners, what they do with their savings, right? No one's stopping them from actually, maybe giving a bonus to somebody or a Christmas mm-hmm. gift, right? To say, hey, you are the best driver this year. You save the most. My question now is it working? Are we seeing a trend through Fairmatic? Are we seeing a trend of people saving money or people becoming better drivers?
I think we can sort of look, in two ways at that. One, at our sort of macro experience overall. So like I said, we've been in market for a couple of years and are showing strong sort of portfolio underwriting results, really best in class type underwriting results. So from a portfolio perspective, we've definitely been able to prove out that the model works sort of in the real world with a volume of drivers and customers. When you look at an individual risk sort of result, I think one of the things that is just like really, really fun to see is, we've had customers come to Fairmatic because they really believe that they're better drivers than their insurance company is giving them credit for. And out of the gate, they're immediately saving money. Wow. And so we don't necessarily see improvement because they were already good.
They were already good.
But that, I think, is it's still a wonderful story. And then we've had, fleets come on that, had an opportunity for improvement. Their driving score was, worse than average. And we have seen, some great customer success stories where they've either, managed the drivers in terms of who they're hiring and how they monitor and use driving and feedback, or they've enabled individual coaching to help individual drivers get better through rewards or management. And so we've got some great stories, and so we've got customers that have been around for 4 years with us, and it's because they were able to drive down their insurance premiums with us because of the improvement, and then sort of want to retain the benefits and continue to have access to our technology that allows them to manage their fleet in a way that they can control their insurance costs.
They must love you guys.
I think for a commercial auto insurance,
not the sexiest category out there.
Right? Last time I checked, nobody woke up and said that out loud. But yes, I think that our customers, see a lot of value for us. And there are customers out there that have come and left because they have seen, increase in insurance premiums because they haven't driven well, and they are not interested in managing that, in putting the effort in to take control. So it's not going to be 100% for sure. But it's, something they knew coming in.
That's okay. You don't want those.
We don't want them. Yeah. We definitely want people who want to engage, and sort of have this win-win, with both us and our partners.
I think everyone is used to talking about supply chain. And whenever we think about supply chain, finding ways to save these companies money so it can be passed along to the consumer is really, really good. Because shipping costs are up, just everything is up. So I'm all for it. If you're a good driver out there, why not get rewarded for it? Pay less on the insurance. Don't charge the consumer as much. I think that's a great thing.
So let's talk about distribution. So you're an MGA. How are you finding your customers?
Yeah, so Fairmatic was born and started writing business. We have written most of our business through wholesale and retail agents. But if you think about our sort of value proposition, we don't feel like we're necessarily limited to that. So we feel like we could have great results and have had a lot of interest from, different partnership opportunities, and our, technology integrates beautifully into sort of other applications. So we have, I think, really an unlimited opportunity in terms of how we distribute our product over time.
What do you mean integrates beautifully into other applications?
So one version of our product is an SDK that we can put into another application. So for example, if you were an application that offered fleet management capabilities.
Kind of like embedded insurance into there?
Yeah, you could embed our SDK into your technology, and we could offer insurance to those customers that platform is already working with, that would be interested in adding an insurance element to their offering.
Mm-hmm. I'm guessing that agents are really interested in your product because of its unique nature, right?
Yeah,
definitely. To be able to go to their customers and say, well, if you're willing to do the work, here's a way to save money.
Yeah, you'll save money.
I think, agents worked with agents for a long time, and I think we check a lot of boxes for them about things that get them excited. So one is we are different, and to have a different option to bring to the table that's new and innovative to their customers, I think they always find value in. And then two, we offer a pretty delightful experience at the gate in terms of our sort of quoting experience that we are able to partner with them on. And so if you make it easy for agents and you offer them something different that is what they see as valuable to bring to their clients, I think they get really excited about us.
If you're a commercial enterprise, you have a lot of different insurances, because typically you're not just like your fleet businesses. They have a fleet which is supporting whatever their core business is. Some companies, their core business is their fleet, right, is delivery. But others, I have trucks because I'm bake bread and it needs to get delivered around. So is it a problem that you are just auto insurance, that you're not bundled with other commercial lines that are necessary for them to carry?
Yeah, no, great question. We haven't seen that yet at all. I think if you sort of put yourself in the buying, in the shoes of the buyer, they're tending to, by and large, not one commercial enterprise is getting all lines of insurance from one insurance company. So, having a different insurance carrier for specialized lines of insurance or that meet a particular need, I don't think feels out of the ordinary. And so when you sort of look at what the value that Fairmatic brings to the equation, I think that we haven't seen that, being a monoline provider be an issue at all.
Mm-hmm. Are you working with companies like a Bold Penguin type that are, aggregating lots of different
kind of like a marketplace?
Yeah. Marketplace?
Yeah, we are either working with or in the process of working with, I think, just about every single type of distribution out there. So I think, like I said before, I think, one of the benefits of being a startup is we've got a pretty advanced and easy sort of way of doing business to start with, and are very much looking for additional ways of distribution.
Unfortunately, you have claims. And you have to deal with claims. Tell us a little bit about how your claim experience or process is any different as a result of the unique nature of your company.
Yeah, I think we actually have a ton to offer in this space. So claims, commercial auto claims, just look at the results over the last couple of years. And like I said earlier, it's there's significant limits out there on commercial auto insurance, and there can be significant, events that happen, and all kinds of vehicles to get repaired, and things get complicated quickly. That being said, I think our product is, one of the places I think it's most exciting and most differentiated is in the claim space. So a couple of things. One, our customers can have their driver from the immediate point of incident electronically report that something happened. They open up our app, click of a button. There's already information about the policy, the vehicle, everything that you need to know at first report, and they can get that to their fleet manager just like that. And so that, I think, is the sort of capability that really helps us shorten the report time and make things really, really, really easy for our customers. And then from there, you see the benefits continue. We are able to leverage our telematics data as we're evaluating claims, and so understand what was going on the road and at the time of event. And that allows us to really inform how we think about the claim and sort of what exposure's there, what happened, and really get a good understanding to drive to really high quality claims management.
That's nice.
I mean, you have all this data. Can you tell whose fault it was?
So I think on any individual claim, the job of an adjuster is to sort of figure out what happened, understand and manage to the most accurate outcome for that individual claim. And what our telematics data provides is this really, really useful set of information as an input to that evaluation. And it's something that we're able to give to claims adjusters that other companies are not.
Yeah,
sure.
I think so.
I would think so. So we want to talk about you.
That's right. Because you're a big deal, right? I mean, we know insurance, we know tech companies who have gone out and gotten low-level people and said, you're going to run my insurance vertical here. But Fairmatic went out and said, let's get this really, really big deal person, extremely smart, been in the industry a long time. I mean, that's pretty cool, right?
Yeah, I think you're calling me a seasoned insurance person.
I think very talented insurance person.
I have been in the industry for a couple of decades, had the opportunity to have roles in all different functions with respect to commercial insurance, from operations to distribution and underwriting, and big large carriers,
big
both
names,
big names, mutual and public, and got some seasoning.
You got some seasoning in you. I mean, I guess, is that what Jonathan and the group are going after? Were they going after somebody who had been around and had done different things? Is that what they were looking for?
I think even early on, so I've been at Fairmatic for coming up on a year. And I think if I were to sort of put myself in Jonathan's shoes and speak for him, that he really, really saw significant opportunity for Fairmatic. And what he wanted to do was overinvest in sort of leadership. And we had a fabulous leadership team with a ton of experience. And to your point, more experience than you would think at a stage company that, like the early stage company that we are. But really, that was intentional to say, let's not build this for sort of the next round. Let's build this for sustainable, profitable growth that we think this thing is going to last a long time. And so he really, I think, invested in and said, I want to make a big investment in bringing in the right talent that can help be around for a while and see us through some significant growth.
Has it been difficult going from these well-established large companies to a startup? Tell me a little bit about the differences or how that felt.
Yeah, sure. I think I'm not totally sure I ever fit the mold of executive at a large insurance company. So I think we could start with that. I would say the switch has been extraordinarily easy. And there's probably two things that stick out for me. One of them that I don't think I thought about, but has been pretty different for me is if you think about being successful in driving change and delivering results at a big company. Big companies have processes, systems, ways of working that have been built for and optimized for 100 years. And it has delivered, I've worked at Allstate, Liberty Mutual. They're both phenomenally managed companies.
Right.
And that sort of infrastructure has served them really, really, really well, as evidenced by their, history's results. But what I sort of, in retrospect, I think realize is sort of one of the ways that you can be a really good change agent at a big company is figuring out what things that you should break. So that where should you say, hey, just because we did that before doesn't mean we should do it that way in the future. And I think I got good at figuring out this is the right place to take risk. This is what we should sort of say, nope, I'm going to break that and we're going to do things differently in the future. I sort of get to Fairmatic and there's nothing to break. So all of a sudden, I'm like, oh my God, I'm in the seat of a builder. Right. And I did sit back and say, wow, this is different. And I have just enjoyed so much thinking about what I want to build instead of what I need to break. And so that's been a hugely just a total lens or, a change in the way I think about leading or running the business that I might not have thought of before I left, if that makes sense.
It does.
Totally.
And then the second bit is I do think I have a little bit of InsureTech startup more in my DNA. So I mentioned that I am not necessarily what you would think of as out of the book of old insurance exec. But, some of that is I grew up in the Bay Area, actually, in the Silicon Valley in the 80s and early 90s. I like to say when guys really were in garages. And my parents both grew up there as well, raised their family. And my mom founded her own business there and she grew it. And my dad eventually went to work there. And I grew up as, part of a small business family in Silicon Valley. And I think you learn a lot about what that means. And it feels extremely natural in a startup type environment to me.
Mm-hmm. I'm very interested in that kind of phenomena. I have that with my own children where they've kind of gone down a path in their careers that are not unlike mine and they're better than me. But I think that they also, you're surrounded by it. It's easier to understand you speak the language, you understand what's going on because you watched your parents do it.
Right.
Yeah. And that came to me a little later, right? I mean, I have had a long career in big insurance businesses. And I'm one of those people that actually chose insurance. I sat down and said, this is where I want to work, which I know is a little unconventional.
So you're the other one.
I'm the other.
I know there's two. You're the
Yeah. And so I think I feel more connected to sort of what I learned and felt growing up in my time at Fairmatic than I ever have. It feels very much like a coming home, to your point. And I always say, I got my quantity of work from my mom and my quality of work from my dad.
Cool.
And hopefully together better, but they're both pretty awesome. So I'm not sure about that.
Because of the 7 people that listen to this episode, there'll be 2 of them.
Well, hopefully.
Hopefully.
I'm not sure how excited about insurance they are.
Well, I'm sure they're excited about you. So like we've said, commercial auto's an enormous market. I mean, I can't imagine bazillions of dollars, billions and billions, billions. Of course, even around the world, right? Do you guys move on from that and add other things, or is it too early to talk about that?
Yeah, we're pretty focused on making sure we have, like, to your point, a ton of runway in the commercial auto space. And we feel like it's, what we know and do really well, and are really focused on sustainable, profitable growth, and feel like that's like focus is critical to us now. And so probably too early.
As we started at the top, big fans of Jonathan. And when we had him on the first time, so we do the episode and we finish, and Lee and I are just like, God, who is this guy?
Who is this person that we didn't even know existed? And he's changed the world, right?
Brilliant, right. Intimately had his hands in huge world-changing moments.
Yeah.
Right? And now he's doing this car thing.
Yeah, but then decides he's like, hey, I've got this new drive, this new passion. I've got to fix this problem. And he did it. I mean, like he's going out to do it. I think that is so cool.
Yeah. Well, little did we know when we first talked to him that there was this Fairmatic thing going on in the background.
We didn't know.
So now it all kind of makes perfect sense.
Now we are de-stealthed.
Now you're de-stealthed. You were so stealth, we had no idea.
Now you're de-stealth. And so what are you guys doing? I mean, how are you announcing it to the world? But you've been selling the product. It's been on the market. So, I mean, what's the difference now?
Yeah, we've been selling the product. It's been on the market. We, work with a ton of different distribution partners already, have a great installed customer base. And so when we de-stealthed and sort of announced our Series A raise, it was much more about sort of sharing or letting the world in on what's been going on at Fairmatic. And so it's much more about sort of telling our story. When I think about what's sort of up next for Fairmatic, we're really looking to continue to grow the team. We're looking to hire. We're expanding our presence, particularly technology teams in both Tel Aviv and India. So you're going to see a lot of hiring from us over the coming couple of quarters as we look to continue to accelerate our growth and just continue doing what we've been doing and making sure we are growing, but in a very, very smart way. So I think we're trying to learn a lot of lessons from the past. So the old sort of lose-lose of the original incumbents, where the buying experience of insurance was, difficult and cumbersome, and black box pricing felt unfair, and sort of customers were overpaying, to the InsureTech 1.0, where companies came in, really improved the buying experience, were able to give customers more competitive pricing, and it felt like a real win for customers. But as we've seen play out, not necessarily sustainable for the companies. And so really trying to make sure we turn it into that win-win, where we offer the customer tremendous value, and the safest fleets are able to save on insurance and control their costs, and then in turn we're able to profitably grow. And again, most importantly, out of that win-win is this additional benefit that we're making roads across the U.S. safer. And I know we started with that, and it feels like a great connection to make again. And I think it's such an important part of our business. It's such an important part of Jonathan's story, and how we got founded. And I think it's a really great way to feel. I've always felt good about insurance. I love an industry where you're here for your customers and their moment of need, and you're able to deliver for them. But to be able to do not just that, but also help make roads safer, just feels like a really, really good reason to come into work every day.
For those of you, all of you in the audience, it took a couple times.
It did,
but we got it done.
So worth it. Worth it.
Totally. We forced Jamie to go into a phone booth So what you all don't see right now is that she's in a phone booth it's somewhere in Chicagoland, and we thank you so much for being with us. A really wonderful pleasure and such an exciting business.
Thank you so much for having me. It was great, and really appreciate the opportunity to tell our Fairmatic story.
It was great. Thank you, Jamie.
Thanks, you, and come back again.
Will do.
I never get tired of being of the privilege of being able to talk to all these wide variety of people who are involved in innovative new ideas, which is pretty much every single podcast we do, right?
And today, think, yeah.
And here we are, another, not a little thing, but a big thing, and just terrific.
Each podcast opens my mind to how smart our industry is, right? We have so many creative people out there, and we're blessed to get to talk to these people. You know, once a week, we get to find a new person to open them up, to learn what they're doing, to learn how their mind works. I think that's the best part of this podcast, is getting to find these new amazing people and talk to.
Right. And so we're so grateful to Chantal and everybody at Fairmatic, who enabled Jamie to be here today, and so grateful to Jamie for sharing
absolutely
such wonderful information and insights, both about her company and herself. And we thank you, our listeners, especially Jamie's mother and father.
Yes.
Thanks for listening to the podcast.
Thank you so much.
And thank you to our intrepid production staff. And until next time, we'll say
goodbye, everybody.